South Africa's composite leading business economic indicator, it says here, fell for the fifth consecutive time by 1.7% year on year during the month of May. OK, it was a couple of months ago, but that's the latest data they've got. And that's after a 1.8% year on year decline in April. That was released by the South African Reserve Bank this morning. On the telephone now is Hugo Pienaar, Senior Economist at the Bureau for Economic Research. Hugo, this is an important indicator, isn't it? Because by definition, it's a leading indicator.
Yes, good afternoon. It certainly is. It takes together a whole bunch of economic data that has some leading qualities to it, and then the Reserve Bank calculates this index. So it tries to give us an idea of how the economy is likely to perform over the next 6 to 12 months. And as you rightly said, the fact that this index has now been coming or declining for the last couple of months, it sort of at the minimum suggests that a re-acceleration in the pretty poor growth we saw in the first quarter of this year is unlikely at this stage, unfortunately.
Yeah, indeed. If you look at the components of the leading economic indicator, the LEI, 7 were down, 3 were up, 1 was unchanged. Anything within the index that really stood out, either good or bad, encouraging or discouraging, Hugo?
Well, I think, if you look at the different components, the one, and the Reserve Bank ranks them from the ones that made the biggest negative contribution to the least. Now, one of them that stands out is actually the index that we do at the BR, our Business Confidence Index that is sponsored by RMB. Now, that came down quite a bit in the second quarter of this year. Now, historically, if business confidence is coming down, companies are not that keen to invest. They're not on a job hiring spree because of uncertainty. So I think that certainly is a negative. The other one, of course, is that the leading indicators in our key trading partners, that those are coming down. That's also one of the features that goes into the domestic leading indicators. So again, one comes back to we have some domestic issues in South Africa, but very importantly is what is happening in the rest of the world. And I mean, you guys have just spoken about the problems in Europe, in Spain. Those certainly are not going away over the short term.
No, they're not. Very quickly, Hugo, I mean, the Reserve Bank surprisingly cut from many people's eyes surprisingly cut from 5.5% to 5%. That was the repo rate. Is that because they are looking forward, or rather looking forward with trepidation, to similar numbers to the one we've just been describing? Do you think we've got more to come?
Well, I think what the Reserve Bank has done is probably a preemptive strike, if you want to call it that way. They've been concerned about the world economy, especially Europe, for a very long time, and I think now they are starting to see some spillovers from that into the domestic economy, and they just want to try and soften the impact of that. It probably, as they said themselves, it probably won't have a huge impact, but what it will hopefully do is just provide some confidence into the domestic economy.
Hugo, thanks so much for your time this afternoon on Power Lunch. That's Hugo Pienaar, Senior Economist at the Bureau for Economic Research, talking to us on the phone from the Western